Good afternoon, guys, and Happy New Year to everyone. I hope everyone enjoyed their break, spending it with their families where they could, and I really hope and I'm expecting this year to be much better for many of us. And to kick us off this year, I'm going to be breaking down a really volatile oil market to exploit some potential short and long run opportunities. And as always with commodities, it's really important that we know the driving forces behind price shifts. So before I move on to any chart analysis, I'm going to quickly go through these factors just to give us an edge when we go to look at the technicals. So enjoy, guys. Briefly, what do we already know about oil? Well, it's also known as black gold, if you didn't know. It is one of the world's most precious commodities. It can be really volatile in price, and price changes can cause a real frenzy in the markets. It can influence really important things in the economy, such as real GDP and corporate earnings. And when we're looking at the factors which affect the price of oil, we're talking about supply first of all, and look really no further than the OPEC. And this is a group consisting of 14 countries. They're the world's major oil exporting nations. It has countries such as Saudi Arabia, Iran, Iraq, United Arab Emirates. And what they do is they work together to determine the prices by increasing or decreasing the oil production. And just like the basic rule of supply and demand, when they decide to cut production, we see a rally in oil prices and vice versa. And there was actually a meeting yesterday, which I'll go over when we look at the chart, because there was some really nice volatility there. As you may have guessed, demand is another factor driving the price of oil. In a period of really strong economic growth, we see higher demand for oil and therefore the price increases. And with the situation around the global pandemic and lockdowns across the world, mainly in the UK at the moment, people aren't travelling as much, and this is one of the reasons we saw prices reach as low as $17 per barrel in mid-April. Demand for oil is really low at this point. And finally, we have just general reports and derivatives, and by this I mean, if you go on the likes of Forex Factory, you'll see weekly and monthly reports on their spare capacity, their target pricing, and we do see some short-term volatility around these events, but I wouldn't say they're drivers for the long-term trends. Okay, so moving on to the chart now, and firstly I've zoomed right out just so you can see the whole 15-year period that's on this chart, so you can see the whole picture. And oil prices are on a decline as we continue to introduce more renewable energy sources. Electric cars is the thing that springs to mind straight away. And if I zoom in, we can see the slump from the pandemic. I just want to show you that briefly. So here we are here in February, and here's the massive drop-off from the lockdowns that were announced. And considering at this point, the OPEC decided to cut their production by record amounts never seen. I mean, it did not stop price falling to the lowest point in 20 years, which shows the real power of what's happened over the last year. But that's the past. Since then, we have rallied quite nicely as economies start to open again globally. And I would say the rollout of the vaccines is one of the main reasons for this. From a technical perspective, I see no reason why, if I just get the right level here, that price couldn't reach this daily order block here. We're looking at around $60 per barrel. That's from a technical side. We do have quite a lot of inefficient pricing. We have a nice gap here to fill. I see no reason why it can get to there. From there, I am actually expecting quite a significant sell-off, a retracement, because this is quite a key psychological level. This was the level which it dropped from. This was the start of the drop from the pandemic. So I think there might be a bit of a reaction from that. But yeah, from a technical side, I can see it getting up to 60. Okay, so I'm going down to the 1 hour chart now. And the reason I'm doing this is because I want you to see the effect the OPEC meetings have on this market, and it is quite significant. So the OPEC meeting took place yesterday on the 5th of January. And as you can see, it was a nice expansion to the upside. And what happened the day before was a move to the downside. And this could have been A, investors placing their bets on an increase in production, or it could have been B, a fake out from this break of the structure low. It held quite nicely for a while. It was a nice break. People could have been retail traders trapped into thinking the move was going to be the downside move. But what actually happened was the opposite. I'll zoom in on that. We had a nice expansion to the upside. We are actually pulling back as we speak now. So that moves me on to the reasoning why. And Saudi Arabia announced out of nowhere that they were to reduce their oil production by 1 million barrels per day in February and March. And the fact is, nobody saw this coming. They actually labelled it as their New Year's gift to the world. And prices increased by a nice 5% since. Other countries did increase their production slightly, but again, this is massively overweighed by what Saudi Arabia announced. And from a technical perspective, I would love a pullback into this area, maybe slightly optimistic. It is the 1 hour order block. It would also represent a filling of this inefficient pricing. These levels for me would be what I like to call the discount levels. It may not reach this 1 hour order block, so it wouldn't be bad to buy from a lower time frame entry off of this inefficient pricing. But what I'd like to stress more than anything is buying right now would to me seem like a FOMO trade. It was a fear of missing out trade. It's really common in retail traders. Unless you've got really deep pockets and you're willing to hold, because I do think this market's going to go higher, I would wait for more of a significant pullback into one of these areas. So yeah, all in all, I like the idea on the daily chart of reaching the February highs of $60 per barrel. But it is about understanding that we are likely to see a pullback. We are seeing it literally live right now. We are likely to see a pullback on the lower time frames. So I'll be waiting patiently for the optimal entry level here. But other than that, guys, that is all for today. As always, please like, subscribe and share our video to anyone who would benefit from it. We really would appreciate it here at Zenfinex. And of course, any questions that you have on the video, feel free to drop a comment, or you can message me on my Instagram shown on the screen, and I'll always be happy to help. Other than that, guys, have a great day, and I'll see you all for the next video.
Thank you.